Let's talk about another global player, which we're very lucky is in fact listed here on our core market, and that is Naspers. Remember, it's a media giant, but the big parts of it are its stake in Tencent, which is one of those super giant internet businesses in China. The pay TV business, which is Multichoice, DSTV, the platform you're busy watching right now. And then they've got a couple of other things going on. Do not underestimate, though, the value of all the assets that are accumulated under the basic framework of this thing, including all those Eastern European assets, e-retail, all of the lot. Market capitalization, 931.6 billion rand. Okay, rand. So there you go. You could work backwards. How many dollars is that? About $70 billion, perhaps. Yeah. Price to earnings ratio 101.3, also sky high. Dividend yield a negligible 0.22%.
That's nothing, hey? That's nothing.
That's like a thanks for coming. Here's a few cents.
For 100 billion. I mean, and you get that. Anyway, they've got their reasons. I'm not going to blame them. So they've got their reasons.
It's kind of like an investment holding company of emerging market internet and e-commerce businesses. So you can buy your Amazons and you can buy your Googles and you can buy your Facebooks in the developed world. But when you come to emerging markets, this thing gets you into the China piece of the equation.
That's true. And you know what is amazing about this is the strong management that they have. You know, the guys who foresee things before they actually happen. Like the way they saw that Showmax should be on their platform before anybody else.
Because a lot of people would have just been very complacent, running out the dish business, but there they go, using and going wherever it is the fiber is going.
And they've had competition, haven't they? And that competition fastly just dies, just quickly dies. And
you mean like the sort of open TV?
Well, I don't want to mention any names. I'm just saying they just die.
And it's because they've got such a stranglehold on the quality content that people want, which is the series these days, the movies and the sport.
I think the best thing that's ever happened on that platform is these local-made films and series. So people enjoy that. I mean, just off of that, I think they've made, I don't know how many of them, but I know they've made a good amount of money from that as well. But it's not just that, it's this Tencent baby.
Well, let's talk about Tencent, because what people forget about Facebook is when you sign up for Facebook, you just give your names and details. But when you sign up for WeChat and some of Tencent's core products, you also put your credit card in. The reason being, it's a bit like iTunes. People buy like avatars, games. They use Tencent's platform to buy taxi rides, using that business that Apple just invested in. They buy train tickets. They send people flowers.
It's called Didi.
Didi, exactly. So now, I mean, Tencent has got real e-commerce chops and makes a lot of money, and that's why it's worth so much on the Hong Kong market.
And the most important thing about Tencent is how they've created that market themselves within the various likes of their competitors, like is it Baidu?
Which is like Google and Alibaba.
As well. So the fact that the guys have kept the strength of that particular business and the fact that they've increased again, I think recently to 35% of shareholdership, because that's how well that business is doing. And unlike Facebook, they don't have China.
So you anticipate, to bring back your comments earlier, that Facebook and Twitter and all Google and them will probably not anytime soon be allowed into China, because isn't that a competitive threat?
That is.
If those guys were to come in, wouldn't there be, or do you think those guys are now strong enough that they'd be able to survive? And
the guys that are there already, and that's why I was a bit shocked in actual fact with Alibaba going to New York. I thought they would want to list in Hong Kong. So, but anyway, that's fine. But what the interesting thing about the Chinese market is you've got 1.3 billion people.
Yeah, I mean, it's a big number.
That is massive. That is massive.
All ambitious, all good savers, all very cost conscious.
That middle class.
All loving their smartphones.
Do you know that they're the only country, no, they're not, but they're one of the few countries that actually the retail client base on the Hong Kong Stock Exchange is larger than the actual corporates. So you've got just people who are just wanting to actually access the stock market with their own money. So that is very strong.
Tremendous company, 55 or 60,000 employees in Shenzhen. Okay, so look, we like Naspers. There's the share price of it. You can see it's trading at 2,100 or something rands a share. It hasn't really done us any big favors in the last 6 months, but it looks like it could continue to go higher. So you hot on this one? You happy?
I'm hot on this one. Although at 2,000, Yeah, it takes some convincing. I wait normally, but when we have a chance, when you get 1.9, then
When
you
it dips below that mark. Yeah.
then you jump in quickly.
Okay, but in principle, we're hot in it, and it's a question of
Yep,
the entry
we're
price.
hot. We're
okay,
hot.
good.